to put it. And from there on, we've seen the markets did try to as in like start with a positive bias, but from there on we've only drifted lower, 0.5% downtick coming in for the benchmark indices. You have Nifty that is hovering around that 18,140 mark. You have Sensex that is below the 61,000 mark, and you have Nifty Bank that is moving in tandem with the benchmark indices as we speak. Take a look at who are the Nifty losers today, and most of them are from the metal pack. You have Hindalco, JSW Steel, Coal India. They are the top three losers on the Nifty index. ONGC, Tata Motors, IndusInd Bank are the other losers. On the gaining front, you have some sort of a green coming on the Divi's Laboratories, which is the top gainer on the Nifty as we speak, 1.3% uptick, followed by Ultratech, HDFC Life and Axis Bank, but their gains are pretty much muted when you compare it with the other peers who are actually losing in trade. Talking about the sectoral indices, as I see, only Pharma is seeing tad bit of green on the screen, about 18 points uptick in the Nifty Pharma index. That also is actually drifting lower. But apart from that, rest all the sectoral indices are in red, with the metal index being the one that is hit most, 1.5% downtick coming for Nifty Metal, followed by PSU Bank, Realty Index as well, and IT Index also is reeling under pressure. But Shrishti, the point to note of late is one bright spot, and it is definitely the insurance pack. Be it the general insurance pack or even the life insurance players, all of them are trying to hold on to gain. As you can see on your screen, you have New India Insurance that is seeing green on the screen. You have HDFC Life that's holding on to some sort of gains in today's trading session. So we've decided to put the spotlight or BNSN lens on the insurance sector, isn't it?
Well, yes, absolutely, Cheryl. Significant gains coming in all of these insurance packs. But with this, before we come to our experts to know what their take and what are some of their top picks in the insurance space, let's listen into what Nikunj Dalmia, managing editor of ET Now and ET Now Swadesh, had to say on the recent buzz in insurance space.
Insurance is a very complex space, but if I make an attempt to just, let's say divide it into two small parts, the real re-rating has happened, or the real price change, re-rating is not the right word, is happened in some of the government insurance stocks. That's GIC, New India Insurance, even LIC from the recent low. That's largely because we are in the middle of this massive PSU re-rating rally. Anything in the PSU space has got re-rated, and that I think is the motive that is driving some of these stocks higher. Second is the life insurance space. Within that, you would imagine that things are stabilizing, underwriting commissions will get over, and you may actually see a turn in terms of where the premiums are likely to move. But that I think is more like a medium-term view, and things are moving in the right direction. But the COVID hit which some of these companies had to take, I think that recovery is still a distance away. Then you've got general insurance. And general insurance, I think, would be the most exciting space, especially companies which are dominated in the health insurance, because Indians are buying more health insurance. The COVID payouts are behind us. That space, in a sense, has got some interesting names now. So if you frankly, the stocks have done nothing. Star Health or ICICI Lombard way below what they were. ICICI Lombard 2-year change almost zero. Star Health way below its offer price. It's a rare enterprises backed company. So I think insurance as a ghetto needs to be differentiated. Avoid PSU insurance stocks, that's hot air. Nothing will happen. They are losing market share. Please avoid them. Just because they are PSU does not mean it's good business. Life insurance, tricky, but the cheap one there is Max Financials. And the real dark horse, so to speak, where I think turnaround could happen would be companies which are focusing on general insurance stroke health insurance.
So that's the take coming in from ET Now. ET Now Swadesh's managing editor Nikunj Dalmia on what he makes of the buzz in the insurance pack. But let's put the spotlight on that entire sector and ask our experts what are their views. We have Kunal Bothra as well as Siddharth Sidani joining us on the show today. A very good morning to you, Kunal, as well as Siddharth, and Happy New Year to both of you all. I've not been able to wish you, Kunal, because you were also on an extra extended long weekend, just like the US markets. And Siddharth, we are meeting for the first time in the new year, so Happy New Year to both of you all. But Siddharth, let me come first to you. And what do you make of this renewed vigor that we're seeing in the insurance pack? Of late, we've seen good up move come in, be it general insurance or the life insurance. Also, you have LIC. You have brokerages that are initiating coverage on this one with a buy rating, and they have a target of around 1,000 rupees per share. So where do you see the insurance sector? Do you think that this will be the theme for 2023 and a re-rating is just about to happen?
Well, good morning, Cheryl, and Happy New Year to you too, and Happy New Year, Shrishti. Well, with this, insurance space has been an underperformer in the last 1 year. Now we've been seeing some kind of a performance, but let's not get carried away. This is a slow-moving sector, and we are positive on the insurance space, specifically on the life insurance space, because the fifth largest market, and looking at the wide distribution network and the position to deliver robust growth, we are seeing improving business margins here in the life insurance space, although the penetration is too low, 4.5% compared to the world at 20-25%. So we have a lot of ground to cover. Here we are very positive on two companies and two counts, that is SBI Life. We have a target of 1400 rupees, along with followed by HDFC Life with a target of 780. So life insurance space is what we are very positive on. We believe value of new businesses can grow by 20 to 25% CAGR for next 2 years. So life insurance space which we have our eye on.
Life insurance space is what Siddharth is betting on. But Kunal, coming to you, all of these counters have been in momentum. We have seen it yesterday and even today. Any of the picks on the technical front, and especially would like to know your take on LIC, because Cheryl also mentioned that brokerages are also initiating coverage. So what's your view on these counters?
First of all, good morning. Happy New Year to you, Srishti, Cheryl, as well as Siddharth, and to all the viewers of ET Now. Now, coming to the life insurance stocks or the insurance pack as such, this is a momentum play which is going on for most of the insurance name. And I would believe that, possibly in the next couple of days or maybe in a week or so, once the momentum dies down for these stocks is where we would realize that which are the stocks which are actually leading from the front, which have managed to lead the entire insurance pack, and the ones which have been just going through a minor rally or a dead cat bounce as such. I would still believe the likes of SBI Life as well as ICICI Lombard and LIC. I think these are the three names in terms of charts which are looking very, very strong as compared to most of the other pack. SBI Life, remember that this was one of the most formidable performers in the second half of 2022 as well, even with the likes of ICICI Pru and HDFC Life, which had been underperforming. So I would continue to believe that SBI Life, ICICI Lombard as well as LIC of India, I think these are the three key names which I think a short-term as well as a positional trader should keep an eye upon.
Okay, so those are the top picks coming in from our experts from the insurance space. But with this, it's time to slip into a short break, but don't go anywhere. We'll be right back, and then it's the time to take up all your stock-related queries, so stay tuned.
Powered by ArcelorMittal.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and flashing on the bottom of your screen is what's happening in the markets. Over the last 10 minutes or so, you've seen the fall actually accelerate on the benchmark indices. Right now, Nifty is down about 150 points from the day's highest point. Let's take a look at what the Nifty Bank is doing, and it's moving in tandem with the benchmark indices, but the fall is greater from the day's highest point coming in for the Nifty Bank. The Nifty Bank is down about 470 points from the day's highest point, 1% downtick coming in for the Nifty Bank. Let's take a look at some of the stocks that have actually declined over the last 15 minutes. Is JSW Steel. If you look at that particular counter, the fall has accelerated over the last 15 minutes. You also have Indus Towers that has fallen much more in the last 15 minutes. You have Grasim, Muthoot Finance also seeing some sort of a weakness over the last 15 minutes. But for now, as you can see it on your screen, the markets are now near the day's lowest point with the Nifty below that 18,100 mark. But in this market scenario, given the way how the markets are panning out in the initial days of the year 2023, Siddharth, what should retail investors do to keep their wealth protected in this year?
Well, Cheryl, this year also can be as difficult year as 2022 can be a rocky year. But in this year, one has to keep that patience going. I think second half of this year, we have a lot of triggers in front of us. First half of the year, you have to think and accumulate good quality companies and stay put with patience with those companies. I think you will make good wealth creation opportunities in the second half of this year.
Maybe the second half of this year has good opportunities, and for wealth creation you can be looking out on that front. But let's move on and let's kickstart taking all your stock related queries. And Kunal, coming to you, the first query that we have is from Nageshwar. He says that he's holding Polyplex at an average price of 1638 and the stock is currently trading below all the key moving averages is what he's spotting, but he wants to know what to do for this particular counter if he has a long-term view on this one.
So, the stock has already actually entered into the oversold territory. I think when it hit that 1460 mark on 23rd of December, I think it had hit the oversold territory, and from there the stock is seeing a bounce. Now, the only confirmation which I would suggest to wait out for would be a surge in volumes or an increase in volumes. What has happened is in the bounce, in the first 2 days of bounce, the stock did pretty well in terms of volumes, but then the last 4 or 5 days, the stock has consolidated with no major change in volumes. That would indicate that maybe a major low has still not been created into the stock over the near term. So we'll have to wait out for a point where the volume starts to increase and the stock stops falling. That could be a point where you may look to average, or as of now, I would suggest a hold on Polyplex.
All right, the next question that I have is coming in from Nino. This one is for you, Siddharth. He's saying that he's doing a SIP in CDSL with an average cost of now, which is around 1100 rupees per share. He's asking if it's a good strategy to continue with SIPs in CDSL for a period of the next 3 years.
Certainly, yes, because the kind of market pie is expanding over the past 3 years. We can see a further expansion in terms of demat account opening, and as and when today CDSL is at 7 crore plus demat accounts, world's second listed company, India's first listed company in the depository space. So we are quite positive on CDSL, and you can continue with the SIP for next 3 years. There is a lot of growth which we are anticipating from here on.
Now the next question is from you, for you. Satya Veni has bought Bata India at a price of 1930, and the other counter he is having is Devyani International at a price of 195. Sitting at a loss in both of these counters, is this a good time to average out? He wants to know.
Well, for Devyani International, yes. I think I've been an advocate of the stock over the last many months, and I've clearly highlighted the zone maybe closer to 175 plus or minus 5 rupees odd as a good zone where you can look to accumulate. The stock is bang at the middle of this zone. 175.76 is where the stock is trading. So if you have a longer term time horizon, you can look to accumulate. Bata India, I would be a bit circumspect. Now, yes, it's a quality stock. It's given phenomenal returns over the last decade or so. But then, the recent charts are still very sluggish for Bata India. The indicators are nowhere closer to the oversold mark. The stock has underperformed in this last 2 months or 3 months of the market action as well. So that could probably bring in some question marks over the near to medium term trend for Bata India. So either the stock gets into any kind of a swift rally mode, or if there is a fast correction or a swift correction in the stock enters into oversold territory. That could be, these could be trigger points where you may look to buy. As of now, not suggesting any trade on Bata India, but yes, Devyani International something is which you can look to accumulate.
Right, Kunal, next one is for you. This one is coming from Santi. He's holding PNC Infra 91 shares at a price of around 265 rupees per share. The stock is currently trading above the 300 rupees per share mark. He wants to know, does it make sense to hold and add some more once the stock falls below 300 rupees per share?
Well, you may need to just hold on to the stock because I don't sense any major volatility or price damage could come by into the stock price. The only reason for that is the last 4 days, or in the last 4 days, the volumes for PNC Infra has started to increase up higher. So when you look at the chunk of average volumes, say from September, October, November 2022, and you look at the chunk of volumes in the last 4-5 days, it tells you, or it gives a sense that possibly the stock is migrating to a higher range. And when a stock migrates to a higher range, there is less volatility and possibly a less chance of a correction. So if you've bought at lower levels, you're sitting in with a 10% profits, best is to try and trail your stop loss to maybe at a level which is comfortable to you, say 290, 295 odd levels, and then hold on to the stock.
Okay, moving on, Siddharth. Denny Matthew is holding 2,000 quantity of UPL from a price of 759, and the stock is seen to be drifting lower since the past couple of months. He wants to know the short-term view on this particular counter.
Well, with a short to medium term perspective, we are positive on UPL on the count that it is the 5th largest agrochemical company in the world, and we are seeing traction in the global markets, especially on the South American markets. Volumes has been coming. We can expect good numbers in this December quarter, followed by March. So please hold on with 3 to 6 month perspective. It's a quality play in the agrochemical space.
All right. The next one that I have is coming in from Sri Kutan, JB Chemicals. He's bought at around 2,000 rupees per share. His view is short to medium term. Wants to know what's the outlook for the same of this counter. Kunal?
So I think it's a good time to book out profits over here. Now JB Chemicals of course has done exceptionally well. When you look at the last 10 years of charts, or maybe even prior to that, it's done exceptionally well. The concern which I believe is arising on the charts is a fact of RSI divergence. Now this is more on the monthly charts for JB Chemicals. So from the 2021 highs when the stock was almost at 1900 levels, current highs when the stock tested 2100 and is now back at the 1900 mark. On both the instances where the stock has made a price-wise new high, the RSI has been significantly low. The volumes in this last 8-10 months of rally for JB Chemicals has been remarkably low as compared to the volumes in the previous rally for the stock price. Now all of those are indications that possibly we may reach a zone of consolidation or a fatigue in the stock price, and it always makes a lot of sense to book out profits into these kind of stocks and then wait out for substantial phases of correction to re-enter.
Okay, Kunal, the next one is an option query. Ravi has bought 170 call option of PFC at a price of 1 rupees 30 paise. That's an out of the money call option. He wants to know what to do with this call option, and going ahead, what are the short-term targets for PFC?
Wow, I think 170 is quite a far-fetched for PFC. It's almost 10% out of the money. I'm assuming that this is a giant series option.
Yes.
It could be a bit of a tall task because what's happened is over the last 4 or 5 days, the momentum has accelerated. The stock has given breakout. In an ideal level to probably have been buying PFC would be at a point of a breakout, which was around the 145 mark for the stock price. From 145-46 mark, the stock has moved up to 157, 158. So buying at the money call option on a breakout is a much better trade rather than buying at the extreme end of a rally, and that too buying 10% out of the money call option. That's not an ideal combination which we typically look out for. So I think if you can minimize your loss over here and exit, that could be a better trade rather than holding on to the stock.
Okay, a lot of short-term queries actually coming your way, Kunal, but let me take this one to Siddharth, and this is from Parth. Ambuja Cements or Ultratech Cement? Out of these two, which one is a better buy for the long term, Siddharth?
Ultratech Cement, because we believe that the kind of capacity addition they've been doing is phenomenal. Industry has been growing by 7% in terms of capacity addition. Ultratech is growing by 10%. So undoubtedly Ultratech Cement.
Okay, Siddharth, the next question is for you. Subrata Ghosh wants to enter into some counters that he's looking forward to, wants you to pick up one. HCC, HFCL and Astra Microwave. Which one will be you choosing?
Is it for me?
Yes, Siddharth, please go on. HCC, HFCL and Astra Microwave.
Astra Micro is one of the stocks which can be picked up from here on with a medium-term perspective.
All right, Kunal, coming to you next, and this one is coming in from Manish Raju. He, like I had mentioned earlier also, Manish actually watches you with a hawk eye. He's talking about your top 2 picks for the year 2023. That's MCX as well as Anant Raj. With MCX fall and Anant Raj volatile moves this week, he wants to know whether you continue to recommend these stocks to buy for the next 6 months, and also if you could suggest a buying level and the target that one should watch out for these counters.
Yeah, these are 2023 picks. They have a shelf life of 12 months, not just 12 trading sessions. So I would be bullish on both of these stocks. And I think I've mentioned my rationale as well for MCX particularly, that I would be bullish on gold going into the calendar year 2023. So that's one of the reasons why I believe that gold trading or trading on the commodity would increase significantly, and that could probably result into positive trends for MCX and Anantaraj as well. The stock has done reasonably well. Have been bullish on the stock and recommended the stock even in the Diwali picks as well. Would look out for targets of 175. And other than that, I'd recommended even the likes of IndusInd Bank, Bank of Baroda as well. So many of the stocks, they look attractive, not from a short-term play, but more from a medium to long-term play.
All right, so that's the take coming in on Kunal's 2023 picks. And like he mentioned, the shelf life is 12 months and not 12 trading sessions. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we will continue taking your queries, so don't go anywhere. Stay tuned.
The deliberation the committee was doing, and you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
Beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing, and you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
Beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing, and you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Welcome back to Buy Now, Sell Now, and let's keep it going with your stock queries. And Siddharth, coming to you, the next query that we have is from Madhuri Balaji. She wants to know the fundamental take on Polyplex as well as Jindal Polyfilms. Her investment horizon is for the next 3 years. What will be the entry price as per you where she can look to enter in these counters?
Well, General Poly, I don't have a much of understanding, but Polyplex, yes, definitely at the current price one can look at accumulating. But let's understand that this company has been falling since a quarter or so. So in a piecemeal manner, staggered manner, accumulation is what advised from here on. And with a 3-year perspective, definitely it's a great stock to be in, where margins can expand further. And we know that raw material prices are cooling off a bit, which is positive for Polyplex. So Polyplex can be looked at with a systematic investment.
Right, the next one is coming from Ajay, and Kunal, Godrej Properties is what he believes is saying that it has a positive RSI divergence on weekly basis. So can it be bought at current market price?
Yeah, so RSI divergence is a spotting kind of a indicator. It's not a trading kind of indicator. So RSI divergence always helps you to try and identify that the momentum on the downside is slowing down, and the momentum of a possible trend reversal can start to happen. But it's always better to wait out for the confirmation to occur into these kind of stocks, because RSI divergence also means that the RSI is incomplete into a downward trend. So till the time you don't see a reversal on the way up, it's going to be very difficult to try and trade these kind of stocks, because they may look attractive at certain point of time, but if there is any kind of a further selling, the RSI would drop down and break the previous swing low as well. So I would suggest to wait out for this trade. Possibly the stock breaks about this 1330 mark, which is the previous swing high. That could be a point where you may look to initiate a buy, because then we can be almost like more certain that the near term or a medium term bottom is in place for Godrej Properties.
Okay, Siddharth, the next question is for you. Advait from Mumbai wants to know, is this a right time to enter into Samvardhana Motherson for a long-term view? What will be your advice?
Yes, Samvardhana Motherson can be entered at the current price, because auto ancillary has been seeing traction, because the OEM businesses have been moving well. We are seeing some kind of a disappointment on the two-wheeler space, but on the passenger vehicle space, it's been positive. If you look at the sales numbers also, especially on the commercial vehicle side. So Motherson can be looked at this point of time. Added to that, Uno Minda is also one option can be looked at, followed by Gabriel. I think auto ancillary pack looks quite interesting.
All right, the next one, let me take this coming in from Shobhana. Kunal, M&M Financial Services, she wants to know whether she can accumulate at current levels. And let me club one more query that I have from Indumati also. It is on M&M Financial Services. So she wants to know M&M Financial Services versus AB Capital, which one is better for the next 3 to 6 months? Because she's already holding M&M Financial at a price of around 230 rupees per share, but wants to know what the view will be on the charts for M&M Financial, given the fact that yesterday you have brokerages downgrade the counter.
Well, it's an easy one for me. I would prefer AB Capital. I think that's a stock which has recently started to look very attractive. So when a stock comes out of a multi-year of correction, a sideways zone, or consolidation on the back of some heavy volumes, which AB Capital has shown over the last 2 months, we call this as a possibly big turnaround as well as a reversal for the stock price. So if I have to pick and choose out of the two names, I would undoubtedly prefer AB Capital.
But now that Indumati already has M&M Financial, so what should she do then with that?
So you can continue to hold on to M&M Financial, and if you're looking to deploy extra capital, you can look to buy AB Capital. I think that stock has also gone through a bit of a consolidation. So I think from 165, which was the high for AB Capital, it's come down towards 150 or sub 150 level. So you're not buying at the peak, but you're buying at a moderate kind of a correction for AB Capital.
Okay, Siddharth, Winsett is looking to invest into 3 counters, that is L&T, Siemens and Bata India. We have already touched upon Bata India. Her investment horizon is for the next 3 to 5 years. So between L&T and Siemens, what will be your pick?
Well, I would like to pick 2 stocks from this. 3 is L&T and Siemens, because of the biggest reason that capital goods has been buzzing big time. Siemens has its own story, got 200 Vande Bharat order. That is also big traction, as well as railways. A lot of orders been coming to them. L&T, as we know, proxy to the economy, infrastructure play. I think it's one of the best stocks in the infra play, looking at the guidance of 15% revenue for next 2 years. So L&T and Siemens is very good for next 3-year perspective.
Since the previous query to you was very easy, I'll give you a tough one now. This one is from your namesake. Kunal Mansukani has written, he's bought a Vodafone Idea at a price of around 16.5 rupees per share. Now he wants to know, when will the share go up? Any scope of it even rising further?
A tough one, yeah. But I would suggest to exit the stock. No point holding this name, even though you've bought at much higher levels. I think there have been many phases of rallies in between. I'm not sure whether you've actually kept a stop loss, or whether it was a trading bet, or whether it was an investment bet. So I'm not sure of the rationale which you've bought into the stock price. But then I think even at current levels, it doesn't look very attractive from a long-term play. So it's always better to try and have a trailing stop loss into these kind of stocks and exit the moment you hit that trailing stop loss. So even at current levels, I would suggest an exit.
Okay, moving on. Kunal, the next one is for you. Sunny wants to know the technical view on GSFC. He's holding 1200 quantity from a price of 145.
Well, I was actually intrigued why GSFC is not performed, because there was a phase where, stocks like FACT, NFL, RCF, etc., many of these, so-called fertilizer stocks, they did exceptionally well for themselves, coming back to their life highs or 52-week high plus levels for themselves. But GSFC is underperformed. Even at current levels, for example, the stock is still trading below the 200-day moving average, which means that, if the fertilizer rally ebbs off, then you could probably expect GSFC to go into a sharper correction. So it's always better to be a bit cautious into these kind of names. In terms of profit booking, these are the first stocks which can get into a stronger wave of profit booking and lesser chance of a recovery or a bounce back. So would not be too much optimistic on GSFC looking at the underperformance compared to the other names.
Okay, this one is coming in from Siddesh, and this one is for you. Siddharth wants to know your long-term view on MapMy India, or CE Info as you know it.
It's a very good stock to hold on, although since last 2 months it's been relentlessly falling on the back of a poor set of numbers below expectations. But the kind of business and the market share they have, 98% of the India's roadmap is what lying with MapMy India. They are into B2B business, tied up with Maruti, BMW, PhonePe, Uber, Ola. So it's a very beautiful business to be in, although little tepid as of now, but this is the right time to accumulate, and with a 1 year to 3 year perspective, we have a target on MapMy India of 1700 rupees. Hold on.
Okay, Siddharth, the next one is from Sunny once again, but he's from Japan and he's a long-term investor. He's holding 750 shares of Crompton Greaves Electrical from a price of 355. Wants to know, is this a good time to average out this counter, or wait for further dips to average?
I think this is the right time to average. You can again average if the stock further falls 5 to 7%. Good business to be in, leaders in the fan segment, a lot of innovations coming on the lighting side of the business, and home decor as a segment has been doing good, and Crompton plays a vital role in this. So I would prefer that you can average it out at the current levels and hold on with a 6 to 9 month perspective.
Okay, one more coming your way, Siddharth. Hari is writing to us from Abu Dhabi, and he has 200 shares of Suven Pharma at a price of around 272 rupees per share. He wants to know if this stock is good to hold, or what should he do, because there are news reports that this counter may be taken over by some other firm altogether. So he wants to know, barring the speculation, does it make sense to stay put with Suven Pharma?
It's a good business in the CRAMS part of the spectrum, and they are expanding. They have a capex right in front of them. So you can hold on. Don't average or don't increase your position from here on. If you want to really increase your position in the same space, that is pharma, look at Divi's Lab. The largest of the API play. India imports 80% of the API. They are the import substitute for the country. Divi's Lab is the play to look at in the pharma space from here on.
Okay, so that the next question is from Venkat Ramani from Bangalore. He wants to know, is this a right time to accumulate Kalyan Jewellers for 1 year period?
Well, I'm not that positive about Kalyan Jeweller. This business has not been doing good. In fact, in the same spectrum of the sector, I would say Titan can be a good option to look at rather than Kalyan Jewellers.
All right, I'll give you a breather then, Siddharth. Let me take the next one to Kunal then. Vimla George is asking Kunal, Polycab or KEI, which one is a better stock to buy at current levels, and what will be the best price to buy either of these counters?
So both are attractive. I think both these stocks have come back towards a retest of the 200 DMA and then bouncing back again. KEI has already done that process, bounced off from the sub 1400 levels to now 1520 mark. And Polycab, I think, is just on the process of bouncing back from the 200 DMA, which is at 2500 level. So maybe another 3% correction and the stock could become a bit more attractive. So you can look to buy either of these stocks. Polycab, I think at 2500 could be an attractive buy, and KEI maybe closer to 1400, 1425 if you happen to get the stock, could be an attractive bet.
Okay, so the next one is from Babu Iyer. He's holding 2,000 shares of Bank of India at a price of 80 rupees. In the past 6 months, the stock has already shown a move of over 100%. So is that a hold at these levels and continue to ride on to the profits, or is that a sell?
Well, I would advise that book profits and take the profits off the table. If not 100%, then at least 50 to 70% take the profits and invest into some of the private banking space like ICICI Bank. If you want to go to a smaller mid-cap private banking space, Federal Bank is also one good stock to look at. So book profits, come out and get into the private banking space, ICICI Bank or Federal Bank.
All right. This is a bit of a longish or maybe pointed question that is coming from our viewers for you, Siddharth, and this one is from Sagar, and he's asking about Craftsman Automation. He wants a funda view on this counter, but what he wants is the fact that he wants to know what's your view about the growth and the earnings trajectory for this counter, because he's holding this one from the IPO levels. He's also added more at around 1,300 rupees per share, despite everyone saying the stock is okayish and the valuations are expensive. But the stock is now doubled, or more than, it's gone more than 3 times higher. So he wants to know what are your projections for this one, earnings-wise, growth-wise, and is it the best one to hold in that pack?
Well, first of all, congratulations. You've been holding it since a long time now, and keep holding it, because we can expect a 35 to 36% CAGR profitability growth from next 2 years. It's a very good company on the powertrain component side for the auto ancillary play. And stay put with this. Added to this, please add Gabriel also, one stock which is addressing to all the segments of the OEMs, likes of two-wheeler, maybe passenger vehicle, commercial vehicle. Vande Bharat shock absorbers has been manufactured by Gabriel. So alternatively, Gabriel also you can look at for investments.
Moving on to the next query, Siddharth, once again for you. The question is from Bhaskar. He is holding 200 shares of Vijaya Diagnostics and sitting at a loss of over 20% now. Wants to know what to do at these levels. Will that make sense to average out or sell and move on?
I think move out is the good option. Don't go for the opportunity loss. If in the same segment in the healthcare space we are positive on the hospital business compared to the diagnostic. Max Healthcare is one play which you can look at. I think you can cover your losses through this. We have a target of 504 with a 1-year perspective. Switch over to Max Healthcare.
Okay, and with that, let us kickstart with the rapid fire then. The first one coming your way, Kunal. This one's come from Sunny. He's writing to us from Japan. He's a long-term investor, holding 750 shares of CG Electricals at a price of around 355 rupees per share. Good idea to buy and average at current levels or wait for further dips?
I think you can continue to just hold on at current levels.
Okay, Kunal, the next one is from D. Mazumdar. He's holding 2,100 shares of Hindustan Copper at a price of 145.
I'm extremely bullish on the stock at 113-14 levels. In case if the stock dips towards 106, that could be a very good zone to buy Hindustan Copper.
All right, Jayashree has 25 shares of TTK Prestige at a price of 900 rupees per share. Siddharth wants to know, does it make sense to average right now?
No point of averaging as of now in this segment. In fact, you can look at some of the FMCG plays like Tata Consumer.
Okay, Siddharth Vinay is a long-term investor with 12 to 24 months of investment horizon, holding 500 shares of Hindalco at a price of 380.
Hold on with the Hindalco, added an investment in the steel space, then that is Tata Steel.
Okay, Kunal, Dasarathy wants to know whether it makes sense to buy Maharashtra Seamless right now.
Well, yeah, I think it's a good stock, has done reasonably well, corrected also much sharply. I think closer to maybe 300 could be a better level to buy Maharashtra Seamless.
Okay, Kunal Mandikandan has bought Tata Power 225 call option at a price of 1.7 January series. Heard some positive news on Tata Power. What to do?
I think you should look to exit maybe as close to your cost price as possible.
Okay, not sure if you tracked this one, but Doner Industries 500 shares bought at 85 rupees per share. Wants to know whether hold or sell. That's from Seema. It's for you, Siddharth.
I think one can come out of this and look at AB Fashion, Aditya Birla Fashion.
Okay, Siddharth, another banking counter query that is from Chandra. Punjab National Bank holding from levels of 33. What to do, hold or sell?
Book profits.
Okay, long-term view on Share India. KJ Singh is asking, any idea about this one, Siddharth? Do you track one?
We don't track this company.
All right.
Okay, but with this is wrapped to the rapid fire session. With this, we'd like to thank Kunal and Siddharth for joining us today on ET Now and helping all our viewers with their stock-related queries. But with this, it's time to slip into a short break, but don't go anywhere. We'll be right back.
राशिफल में हम खेलेंगे जीवन
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and at Times Network, we are always looking to create investor awareness and making financial matters simple for our viewers and keeping up with our values. We present the second season of Nivesh Ke Fund, and on this edition, we take a deep dive into the world of index funds. Listen in.
The pandemic has seen a number of Indians turn to the financial market to invest their wealth.
Yes, but many have wanted to follow a passive route of investing.
Absolutely. And they have been able to do so by investing in index mutual funds. But Aisha, how does one know if they are investing in an index fund or actively managed fund?
Well, it's quite simple. Index funds mimic a stock market index like the NSE Nifty 50 or the BSE Sensex. So your investments are only in the stocks that are part of the index.
And the investments are made in stocks, replicating the same weightage that they have been in the index against which the funds are benchmarked. And since the fund manager just has to replicate the stock composition of the index, the expense ratio is quite low as compared to actively managed funds.
But Nikunj, while a low expense ratio is ideal, investors should also check the tracking error of the index fund before they invest in it.
Yes, a low tracking error shows that index funds returns relative to its benchmark do not vary much, which is a good thing.
Nikunj, another benefit of investing in index funds is that investors get access to diversification.
Right. Since the index fund replicates the index, diversification is built into the system.
And if someone is bullish on the long-term prospects of the index, then an index fund is a very simple and easy route to stay invested towards that belief.
Investors can consider adding index funds to their portfolio, but only after consulting with their financial advisor.
That's all in this edition of Nivesh Ke Fund, where today we were talking about index funds. Stay tuned for more such investment insights.
All right, and with that, we come to the end of this edition of Buy Now, Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. But stay tuned. Markets at noon coming up next with Pankaj Podar and Anisha Jain.
Right. And making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
profit booking in metal continues amid broad-based muted market sentiment. PSU banks, realty stocks also remain a drag. Benchmarks are extending the opening losses, while the broader markets also mirror the move of the frontline index.
We've just ended the quarter, and quarterly updates come in. IndusInd Bank see profit booking on decent sort of operational numbers, steady performance matrix from HDFC Twins as well as Yes Bank. Financials, however, remain overall under pressure today.
Equitas Small Finance Bank is a high flyer today after the RBI allows SBI funds to buy almost 10% in the bank. The stock has hit a fresh 52-week high and is trading above all key moving averages.
DMart is under pressure today. This is after store addition slows down over the past 4 quarters, even as revenue growth jumps. Goldman Sachs keeps the sell rating on the stock, stays underlying growth of retailer has moderated in Q3.
Decent debut for Radiant Cash Management in an otherwise weak market. The shares list at a premium of almost 10% amid tepid market mood. The company agrees timing for the issue could have been better, but adds that they will continue to focus on risk management and that their financials remain strong. Hello and welcome. You're watching Markets at Noon on ET Now. I am Anisha Jain. With me is Pankaj Podar. Pankaj, we're at the lowest point of the trading session, below the mark of 18,100. The mid-caps and the small-cap index are seeing sharper cuts, and it seems all sectors are trading with a bit of a red tinge. So after that sell-off that we saw on Wall Street yesterday, it's mirroring the move today in the domestic markets.
Actually, there's absolute lack of buying and people want to sell. So I think that's the main thing that, one can watch out for. And we did try to open on the higher side in the morning. We did try to recover. Banks overall particularly did quite well. But then I think they've just lost their way as far as mid-banking names is concerned. And that's probably the reason, why you can see this sort of a move as far as overall market is concerned. Every time, you're hitting your screen, it's making a newer low. And that's always not a good sign. I'm sure our next guest on the show will give us more light and more perspective regarding the same. 170 points down, but as I told you and as even you said, the problem area is the broader market, which is actually mirroring, and that's keeping the advanced decline not that great. Shilpa Rawat, derivative lead analyst Prabhudas Leeladhar, is now with us. Shilpa, can you just talk to us about the market? Continuously we are seeing newer lows being hit on the Nifty. What is the level to watch out for?
Good afternoon, everyone. Like Nifty is actually, facing resistance at 18,200 to 250 zones on the continuous basis for the third consecutive session. It was trying to hold above 18,250, but it is not. So now, as anticipated, it was now sliding down, and we might see a level towards 17,900 as well from here. Likewise, Bank Nifty, if it is breaching 43,000, then the fall can, accelerate, and we can see a fall towards 42,000 zones.
Okay, so that's the take as far as Nifty, Bank Nifty is concerned. But let's get stock specific. What are your recommendations, Shilpa?
I have one buy and one sell. Buy would be ITC, trading at 327 zones now, has a support at around 320, and I'm looking at targets of 345 to 350 zones. Likewise, a sell in Gujarat Gas. Gujarat Gas trading at 490 zones. It has a strong resistance at around 500. So a stop loss of 505 and look for targets of 450.
Recommendation for Gujarat Gas. Of course, the stock is also dealing with the fundamental news flow that they have reduced the prices when it comes to gas, and that might hit their margin. That might be the reason why the stock is coming under pressure. Thank you so much, Shilpa, for joining us today. Really appreciate your time on the show. But moving on, let's go across to my colleague Vinny. She's standing by to tell us what the Q3 updates are, and as far as Avenue Supermarts is concerned, because the revenue has seen a solid jump of around 25% on a year-on-year basis, though the stock is seeing a tad bit of profit booking. Vinny?
Absolutely. When you look at the numbers coming in for the provisional Q3 update coming in from Avenue Supermart, 11,304 is what the revenue is at, which is a 25% growth on a year-on-year basis and a 9% approximately growth on a quarter-on